You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning in to Mining Stock Education. In today's show, you'll be hearing from Executive Chairman Gerald Panneton from Gold Terra Corp. The website is goldterracorp.com. And in our previous interviews with Gerald, we've been talking about how Gold Terra is pursuing 5+ million ounces of high-grade gold, primarily via two shear zones. One is the Crestaurum shear zone, and the company just completed a drill program there, which we're going to talk about and get Gerald's insights and feedback on. And then also the Campbell shear, which is a program that is just about to be commencing. So Gerald, welcome back onto the show. Bring us up to speed on the Crestaurum results. What's the significance here, and what does this mean going forward, please?
Thank you, Bill, for having me on your show. And welcome to everybody who's going to be listening to this interview. Yes, recently we just completed approximately 8,000 meters of drilling, which is almost like 25,000 feet of drilling on our Crestaurum shear. The Crestaurum shear was a target identified in the past, which had a resource of about 200 to 250,000 ounces near surface. High-grade mineralization, and as you can see on the long section that will be passed on during the interview, you can see that everything that is in purple on the long section is somewhere between 30 to 60 grams or 1 ounce to 2 ounces per ton over 3 to 4 meters. So the GT, the gram times thickness, is very good from surface down to about 200 meters. The deposit was never explored at depth. In all those years that Terra X before us, or before Gold Terra, the deposit was never explored properly at depth, and the belief was that the deposit was also cut off to the south by a fault called the Deg fault. So our program was aiming at testing at 400 and 600 meters, or basically roughly 1,400 feet and 2,000 feet deep, the Crestaurum shear zone. The shear zone is only 2 to 3, 4 meters in some instance, and we intersected the shear in every hole at depth. No question. The shear zone was right there, but they were lacking quartz veining. And what was missing with those quartz veining was the gold fluids. So the gold and the quartz vein not being there, our result at depth are mitigated. They're good technically, but they're not good to pursue. So we basically close off the depth extension below this area of the Crestaurum. But the Crestaurum shear is probably 10 kilometers in strike length. We're looking at 1.5 kilometers of strike length. So now we just reopen it to the south because the Deg fault is not a fault that cuts off the deposit. And the proof is in hole 57, for example, and also the hole that we did on the other side. They are definitely showing continuation of the shear zone. 43 grams over 1 meters. And of course, a couple of holes that we did as well, where infill drilling were very good, such as hole 103, where we intersected 9.5 grams over 4.5 meters. So now that we know that there is no depth extension, more likely Crestaurum will become more of an open pit target, a shallow open pit target, maybe down to 200 meters. Maybe the potential is more like 500,000 ounces versus 1 or 2 million ounces. So it's a smaller target, but having a high-grade deposit, open pit, as a satellite to a main deposit is valuable. There's no question that Crestaurum one day could be mined, but it's not going to be the cornerstone of our company, which always been my target was the Campbell shear. And we can talk about that a bit later.
So with the results that have come back, just at the conceptual level now, if a major is looking at the projects you're developing, how would they interpret this relative to the big plan of what you're trying to accomplish? Would they see value now, or you have to come up with that 2-3 million ounce pit before they would really see value in Crestaurum?
I worked for a major for many years. I can easily answer that question. I worked for Barrick Gold for 12 years. I can tell you that unless it's 3 to 5 million ounces, look at the deal we signed with Newmont on the Con mine exploration. We have a back-in right of Newmont if the deposit is 5 million ounces. no major will look at the Crestaurum deposit as, they will look at it like I'm looking at it. My eyes have always been, we need to have a deposit that can sustain its own development. Crestaurum now is more like a satellite deposit, unless it goes over 1 million ounces. Then a small junior like us could develop the Crestaurum deposit if we get to 1 million ounces. But there's a threshold to be able to invest money. We usually say we need 10 years of production. We need to make enough money. We need to, when you capitalize a project, 1 million ounces will allow you to spend maybe $100 million to develop a mine. Not much than that. When I built Detour Lake, we had 16 million ounces and the project cost $1.5 billion. So $100 an ounce, correct?
Yes.
So that's how you look at depreciation. And that's very, very important. So no major will be excited about Crestaurum. However, it's still a very profitable, high-grade open pit potential. Shallow, rich, and doesn't require big equipment, and could be easily a very nice sweetener to a mill on an underground mine. Mm-hmm. Because you can get the ton much more easier out. And don't forget, it's open. Crestaurum can link to Barney further north, which is another deposit on our property. And also further south, it's continuing all the way to the Ikeiko Fault. So there is a 10 kilometers span that needs now to be paid attention near surface. The good news, near surface, cheaper drilling. Mm-hmm. Easier to drill, much faster, and much less expensive. And don't forget, we're doing very good now. The company used to drill almost $300 per meter. We're now sitting, with all the change we made this year, our drilling cost is about $200 a meter, Canadian. We're in town. That's the big factor. But we're not big enough as a discovery to interest or turn the eyes of a major, for sure. But with Samoto, low grade, with Crestaurum, high grade open pit, we're probably going to get over 1 million ounces very quickly with the program we did this year. So there's good news. Our resource that used to be 750,000 million ounces, 735,000 ounces, is probably well over 1 million ounces now. And that's the good news about our program. And now our focus is now moving on to our Campbell shear target.
Gerald, before we get to Campbell shear, on the idea of what Barrick is looking for, since you work for Barrick has been on record saying they want to buy assets that produce at least 500,000 gold ounces per year for 10 years in the lowest quartile of the cost curve. Would you define that as a world-class project? And what's the difference between a world-class project and a tier one asset that someone like a Barrick would look for?
When Barrick talks about its target of 500,000 ounces a year, is that, and I've always, when I was working at Barrick, we were producing north of 8 million ounces. Now they're somewhere around 5. So is Newmont. And as you know, Newmont is our partner on the Newmont ground on the Campbell shear. 500,000 ounces a year, 10 years is 5 million ounces. So when we said threshold about what will interest a major, is a 5 million ounces deposit, no question. The other thing about tier one operating costs, which means where is it the cheapest way? So there are two things. You can live with political risk and mine in Africa, right? Or in Indonesia, or in different part of the world. Or you can stay in a more non-political place. Nevada and Canada are still two of my favorite targets because there's no risk of unrest as much, but it's more expensive. But at the same time, because our projects are in town, in the city of Yellowknife, everybody goes home at night. And that's the advantage of Gold Terra, is that if we deliver 3 to 5 million ounces over the next 2 years, you have to give us a bit of time. Now we just went through 2 targets. We just did almost 20,000 meters of drilling in 2020. And Samoto is still open, but it's low grade. Crestaurum is still open, high grade open pit, but shallow, no depth extension. So we're already like over 1 million ounces. So my chances on Campbell shear is that even if I just find 1 or 2 million ounces, I will be like a 3 million ounces company. A 3 million ounces company, give $100 an ounce. That's a $300 million market cap. You can evaluate that. And some company gets way more than $100 an ounce per valuation. You have to look at the cost of operating all in, which usually is between $1,000 to $1,100. And when Barrick talks about Tier 1, he talks about property that can deliver gold below $1,000. But very few do that. It's very hard, today's world, to get better. And if you're in Africa, for example, yes, you can probably have lower operating costs, but you have a much higher risk if there's unrest, like we saw in Mali this year, for example.
So your 5+ million ounce potential, the next step of that is on the Campbell shear. The drills are about to be turning there, aren't they?
We just actually completed 2 holes. The drill is just stopping for Christmas now. We're taking a month break. We have been drilling nonstop since mid-August. Usually we do a Christmas break and a spring break, which usually is in mid-May to May. The month of May usually is our spring break because of ice melting and things like this. We've been starting to work on the Newmont claim. We did the first 2 holes. They were technically very interesting, geologically speaking. And in January, we'll be starting our major program, which is about 20 holes, 10,000 meters on the Campbell shear, as per the press release we did in November. So if you ever want to go back in the YouTube and show our November press release on the compilation of the Campbell shear, this is a very important long section, because what it shows is the footprint of a 5 million ounces deposit, which basically is 1.5 kilometers long and 1 kilometer deep. So you know the footprint is roughly 2 square kilometers. And it's supposed to. So now that's our job to repeat that potential of 5 million ounces along the Campbell shear, which we control for the next 14 kilometers to the south, 14 to 20 kilometers to the south. And the potential is there. There's a lot of surface mineralization outlining the Campbell shear from surface down to 300 meters, a couple of holes at 1,000 meters, 3 grams over 12 meters. The shear zone is there. So it's not a question, is it there or not? We know it's there. We just need to drill and drill. And that's our program for this winter. So we should have tremendous result in Q1 2021. The result always tell you if we know, geologically speaking, that we hit the target. So we know that because visually we can see it. But you always have to wait for the assays.
Mm-hmm. And have they been sent to the labs already, the first holes?
They should be sent before Christmas, and the results should be coming out, sometime in January. We still have 10 good holes coming out of Crestaurum as well in January. And we firmly believe that, the Campbell shear will generate result because we're drilling below 2 small deposits that were outlined by Miramar and Cominco in the past. So it's not like we're drilling in the fog. We're drilling a very specific target that has already been outlined as a resource. And you can see it from the long section. You can see it very well on the long section.
The website is goldterracorp.com, and the ticker symbol is YGT in Toronto and YGTFF for those that want to buy in the States on the OTC. Gerald, really appreciate this update. Thanks for coming on today's show.
My pleasure. Thank you, Bill.